Hello everybody, welcome back. Let's have a look at the chart. So Bitcoin pulled back with the stock market and the dollar moved up in the face of the stock market because of CPI. So CPI data came out yesterday, slightly hotter than expected, shocked the market a little bit, but basically all we did is pull back into a 4-hourly Bollinger Band center, which, on the Telegram yesterday, not that I have a signals group, that's really not what it's about, but I said, look, if we're going to bounce from anywhere, it'll be from here. And if we do come down further, it'll probably bounce around the 46,600. Bitcoin is still bullish until further notice. As much as I expect a consolidation to begin very soon, I'd still target around 51, 52,000 really for Bitcoin in its current direction. It's bullish until it stops really, so you can't really get in the way of something that's this bullish. So on the Telegram like yesterday, I said, look, you could buy the dip here if you wanted to. Just make sure you manage your risk. And actually, altcoins are probably going to bounce more. Based around the dominance chart's resistance. So this has got a daily pump signal. So this is going to break out. It's definitely going to break out. But until we see the breakout, I think maybe this rejection could take us down just maybe by 1% or something like that, which should allow for altcoins to outperform Bitcoin at least over the next couple of days. So I did buy some dips, scalpy trades, nothing crazy. Again, I'm still massively in cash. But yeah, I did deploy some capital yesterday into a handful of altcoins. The ones that you'll see at the top here, nothing special, nothing amazing, and I will be looking to take profit on them probably today or tomorrow. But we'll see how see how it goes. Right, we'll see how it goes. Manage the risk, don't lose. That's the main thing to take away from all of this. You can buy these dips, but make sure that you're not targeting astronomical highs. Recognize the resistance on Bitcoin is sitting around 50,000. I do think it's going to move towards 51, bordering 52. But much higher than that, I think we are still on borrowed time. So this is what I would call a train dodge trade, and nothing more than a little scalp, really. So let's have a look at the very short-term time frames, being the 1 hourly. We'd never do this normally, but we are going to do it this morning. So the 1 hourly, there's a pullback, managed to reclaim all moving averages, and moving on and up, crossing above the 0 point on the MACD. Everything's looking quite good for this to continue up towards 51, towards $52,000. We won't look at all the individual altcoins. That's madness. That's what we do on Patreon live streams. And so if you want to join that, there's links in the description. So we'll just look at Ethereum, which is doing exactly the same thing as Bitcoin. It has not yet made its positive cross, but I believe it will make a positive cross on the histogram here above the 0 point. So that'll give us enough to surpass yesterday's high and probably start trending up. Now, the reason I think the dominance chart mixed with Ethereum is a good indicator of what's going to happen to altcoins over the next few days, possibly over the next few weeks. But again, depending on your risk management and risk appetite, it really don't want to send you down a altcoin rabbit hole because it could end in absolute tears and destruction. We are looking quite good, I have to say, on the 1 hourly and the 4 hourly, with the dominance chart getting a possible rejection, even if it is going to just reject to the tune of like 1%, to the maximum of around 4%. So there is chance that this alt movement that's going to happen as a result of the dip yesterday will get a little bit of legs, and there is a chance that it could continue to trend up for the rest of this week into next week as well. But we are hanging in the balance of Bitcoin at $51,000 to $52,000, so we don't want to get too complacent. I really don't. But if we were to measure the altcoin scenario based around Ethereum's strength, the next major target for Ethereum is 2,800 for a minimum. To a maximum, I've got this terrible laptop. I've been it's not happy. Does not want to zoom out. It hates zooming out. So this is what you're just gonna have to deal with this while I'm away. See, I think I'm going to have to bite the bullet and buy something slightly better. I just hate laptops, really. Just hate them. They're never designed to last. It doesn't matter how much you spend on them. They just aren't designed to last. So why would I spend loads of money on one? I suppose so I could make videos. But then what's the point? I don't make any money on YouTube, so what's the point of that? So the thing I wanted to try and point out, if my RAM could handle it, is that we've got a variety of different exit points for Ethereum. And it's not that I'm trading Ethereum. I'm using Ethereum as an indicator in itself to find rejections for the rest of the market. So it was 2,800 being the first baby step. The first major step was going to be $3,000 flat. And then beyond that, it's around 3,400, I would say. So that is actually okay, if you think about it, to allow for all the other altcoins to move in the shadow of Bitcoin and Ethereum's resilience. We'll just call it resilience. I won't call it particular strength. I'd just call it resilience because the charts are all still quite good. So I found it an acceptable entry yesterday on yesterday's dip when Bitcoin hit that Bollinger Band on the 4-hourly, with the assumption that we're going to move into and above $50,000, probably get rejected before $52,000, and the dominance chart probably seeing a rejection here. If it doesn't reject, then obviously we're going to have to reconsider what's going to happen to altcoins, because this is basically primed for a breakout already. But a small pullback on this one is acceptable, I think. So, long story short, the market should continue to bounce today as a result of yesterday's pullback, which was not an organic move, it was a CPI. And with that is a event which is basically a bit of a shock in the market, and the S&P hit 2% pullback, and by the end of the close, just before the close, it had already recovered almost half of those losses. So I still think that the bulls are very keen to keep things moving up higher, but recognize what I'm saying. Just because I'm bullish over the next 24 hours does not mean that my overall analysis has changed. I still believe quite strongly that a consolidation in stocks and crypto is on the cards, and it's going to happen. But there's nothing wrong with snagging a few percent until that happens, so long as your risk management is absolutely tight. It does have to be tight because the Dixie is breaking out. There's no two ways about it. The Dixie is breaking out. Based on this daily, we're literally a fraction of a percent away from generating a pump signal, being above all major moving averages, looking to basically start to move up, probably for several months, I would say. And so recognizing that as the reality of the charts and the driving force for everything and everyone, we don't want to get complacent. Any new trades, like the ones that have been placed by myself yesterday, have to be managed very carefully. And you don't want to have like targets of 50 to 100%. You want to be getting out of them in increments. And you do really need to think about Bitcoin and Ethereum and Dixie and stocks. So whether I'm trading Atom or Polkadot or XRP or HBAR, all of these charts do offer decent returns, but they're not going to be able to do it on their own. They don't have that kind of power. They need Ethereum, they need Bitcoin, they need Dixie to behave itself for these targets to be met. Right, so basically, I'll leave with you there. So I expect a bounce today. That bounce should hopefully continue through the rest of the week, but it will end when Bitcoin ends, and the next major target for Bitcoin for me is just lower than $52,000, and that would be it. So recognize what this is. We call it a train dodge. You're on the train track, you want to look cool, you want to impress everybody by jumping off the train track just before the train hits you in the face. The longer you wait, the cooler you look, but the more danger is posed. Otherwise, it wouldn't be impressive, would it? If you jumped off the train track 10 minutes before the train came. So, that is basically what's going on here. This is a train dodge trade. You're on borrowed time, and as much as you can see some serious gains, and some nice trades, it's not all about the individual altcoin that you're trading. It's about the bigger picture, which is Bitcoin pushing towards a new level of resistance, Ethereum doing the same, and Dixie really eyeing up a much bigger breakout now. So just be very careful. But either way, it does look quite good in the very, very short term. And with that, I will leave it with you there. Just because, and this, like the comments are probably people are going to go mad on this. My higher term time frame analysis exactly the same. We are looking at a much larger consolidation. Any upside that we see now will be dwarfed in comparison to the downside once this consolidation begins. So just because I've talked and entered some trades does not mean that my analysis has changed. I felt that given that the pullback was given to us by the CPI, it was an acceptable trade to make because it wasn't initiated by its own chart. So it will be a buy the dip and sell the rip, and not a buy the dip and wait for ridiculously high prices. No way. Buy the dip, sell the rip, and then get ready for the larger consolidation, which is coming. Anyway, I'll leave it with you there. Thanks for watching, guys. Hope you have a nice day. Take it easy.